From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 4th, 2017. In just a moment, we'll be taking a look at the USDCAD, the US dollar versus the Canadian dollar, for today's trade analysis. But first, I want to recap the trade suggestion made yesterday. Yesterday, we were looking to go short or sell the NZD-USD into resistance. The key point here, if we take a look at the daily time frame, is this blue trend line. You can see the market's been coming down for the past couple of months, and really over the past 2 weeks or so, just been riding down the inside of that blue trend line just over the past couple of weeks. Let's zoom it in a couple of times here on the daily, and you can see the market just falling along that blue trend line. We take it back down to the 4-hour time frame, and as we get down here, I'll zoom back out and you can see falling along that blue trend line. Yesterday, the market was clearly underneath it. Came back to retest that orange shaded area, which happened to be historical support here, and even the 382 Fibonacci retracement level of a previous trend range, right into the 7010, 7005 level, bottom of the orange zone. So we took the short yesterday into the orange zone, have seen a decent amount of profit all the way back down to 69.75. I have already taken my stop loss to break even. I can't lose on the trade. I've even closed some of the profit on the trade. So a decent opportunity all the way around, just selling underneath the orange zone with very limited risk and higher potential reward. Let's go ahead and take it on over to the USDCAD. It's a similar situation, yet opposite in this case. Here we can see the dollar CAD pressuring higher, moving above what was resistance. Let's go ahead and zoom it in on this black box on the right hand side daily time frame. Look at that over the past couple of weeks. One more time. Over the past couple of weeks, we've been just sitting inside this black box, support at the bottom in the yellow zone, resistance at the blue zone at the top. Now today and yesterday we see a significant bullish price action, and it has now pushed through the 1.3400. So your first question is, hey, if we're going to buy this, where's the best place to get into it? Where's the best timing to get into the trade if we're going to go long and buy this currency pair? Well, it's my expectation always is that I want to buy at a lower price if I'm going to go long, because buying at a lower price is better investment. Remember, buy low, sell high. So it's better investment. Not only is it that, but it also gives you an opportunity for lower risk. You know, if you buy it now and it pulls back to the blue zone, then you have higher risk. If you wait for it to pull back to the blue zone, you look for lower risk. So how do we know that this is going to be a real breakout and not a false breakout? So let's go ahead and take it on down to the 4-hour time frame. And as we get down here, let me zoom out one more time. You can see the resistance here at the blue zone, resistance here, even resistance over the past several hours. And then finally we saw the market just push right on through that blue zone. But again, the question is this a real breakout or is it a false breakout? Well, it's always my assumption that I'm looking at a real breakout when I see a singular candle body open and close above there. So I can't really say that it's a real breakout yet, because literally the current candle, we got some news out of Canada today, the current candle could just zip right on down back below the blue shaded area and becomes a false breakout. I'm looking for the open and close of a 4-hour or daily candle above 3400, 3420, the blue shaded area, to increase my confidence. And then again, I want lower risk and higher reward. So how do I find lower risk? I want to buy it as it dips back down to the blue zone as support. Remember, our risk at this stage is that it gets back underneath the blue zone. So we don't want it, now that it's above it, we don't want it to get back underneath it. So our stop loss or our risk is underneath. And I'm going to make that line red because it's easier to see. So that red line represents a potential stop loss, because if it breaks back under the blue zone, we don't want to stay in it very long. So how do we reduce the distance or the size between our entry and the stop loss? Right now that's 55 to 60 pips. Well, if we wait for it to come down to the blue zone, settle down their support, we nearly cut our risk, potential risk, in half just by waiting for it to come back down to the blue zone, at least 1.3420 top of the blue shaded area. But remember, we still need the breakout. We need a clear clue that this is a real breakout and not a false breakout, open and close. Again, news today, we can see it just turn right back around. So if we can stay above here, especially after news, we'll look for the market to target back to the green zone. But again, the lower risk and higher reward opportunity is to buy on the retest or dip back down to the what was historical resistance, now becoming support, and then we buy and target the next resistance zone for the Usdcad today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.